Did you know that one of the most important decisions faced by a homeowner during the home loan application process is when should the interest rate be locked in? Did you even know you had a choice? Here's a valuable opening tip. Home buyers can lock in their interest rate at the time of application or at just about any other time during the transaction. Don't assume the best and only time to lock the interest rate is as soon as the property goes under contract. There are more choices than that, and if a buyer doesn't consider multiple options, that lock-in decision could cost or save a bundle. Let's dig deeper. Welcome to another chat with your mortgage uncle. If you want to build generational wealth for yourself, you've come to the right place. I'm Uncle T, and today I'm going to provide you with some valuable mortgage information in this quick as a flash tutorial. As I like to say, experience matters, especially when it comes to mortgage financing, and yours truly, your mortgage uncle, has 40 plus years of lending knowledge under my belt, which I'm going to share with you. So buckle up, because in my world, sharing is caring. Here's what most people don't realize. When a loan officer quotes a rate, they are quoting an interest rate which has a specific cost for a specific rate lock period. Rate lock periods typically encompass either a 15, 30, 45, or 60-day period, and longer if needed. The longer the lock, the higher the cost to get that interest rate. For illustrative purposes only, let's say a certain interest rate costs 0 points for a 30-day lock. That same interest rate could cost a quarter of a basis point for a 60-day lock. Doesn't sound like much, right? But on a $500,000 loan, that quarter of a basis point equates to $1,250 in extra cost for the longer lock. My point is, it's important to understand that a loan client can lock in the interest rate at any point during the transaction. Timing is important. The shorter the lock period, the lower the lock cost, and vice versa. Let's look at a possible situation. Let's say a 30-day closing gets delayed beyond the original 30-day lock expiration date by even a few days. Now, more than a 30-day lock period is needed to close. That means the borrower might just have to pay for a lock extension, or worse, if the original lock expired before relocking, they could lose the original interest rate completely and need to relock at whatever rate is available that day at a worst-case price. Yikes. So here's the strategy smart buyers use. Instead of locking the day they go under contract, a borrower might want to at least consider waiting until they're 7-10 days into the process. Why? Because by then the inspection is done, the title work is moving forward, the property appraisal might already be completed, and the buyer really has a clearer picture of a realistic closing timeline. And if interest rates drop during that week and everything is on schedule to close on time, the borrower just saved money by waiting, because now they can typically execute a shorter lock to cover only the remaining days through closing. That's a shorter lock period for a potentially lower cost. Now, the flip side does need to be considered. If rates are climbing fast or the market is volatile, locking early, like at the point of application, might just be the safer and smarter move. That's where your lending professional becomes the crucial advisor, which is why, without a doubt, the smartest move a home buyer can make is to work with an experienced loan officer who understands the current market influences and who also considers the borrower's specific needs and wants and can honestly analyze that information before suggesting the correct lock period. That decision by the borrower can literally save thousands of dollars in interest costs over the life of the loan. That's a wrap for today. If you found this useful, like, comment, share this video with anyone who's thinking about buying a home, and suggest they reach out to me for financing discussions. No pressure, no strings attached. Remember, my team can arrange mortgage financing in all 50 states with incredible rates, with a massive array of loan programs to choose from, all used to make your transaction smooth and quick. Bottom line, I'm your mortgage uncle, information packed and available to anyone interested in formulating a personalized strategy to achieve and maximize the benefits of home ownership. Reach out to me for more information. Let's build your generational wealth through home ownership together. This is your Uncle T, your mortgage uncle, saying peace out.